So what I want to do is demonstrate as best as I can what PestRack is capable of doing. So I'm going to do a very focused demonstration. I'm going to load the Microsoft 10K. So I'm going to talk while it's loading. It takes a few seconds to load. So the report is loading. This is the 1917 Microsoft 10K. It takes about 30 or 40 seconds to load the entire report. Okay, so the report is loaded, and now I'm going to validate the report. So the validation is running, and there are the validation results. So I want to put this agenda up here. I'm going to use that in a second. Okay, so what happened was the report was loaded and the model structure was validated. There are no model structure errors. The fundamental accounting concept relations were validated. There were no errors there either. We do have no disclosure mechanic errors. There are no disclosure mechanics. Look at only the consistent ones. Those are all fine. There's no inconsistent results. And we go to the reporting checklist validation. We look at what is consistent. All these are consistent with the expected result. These are inconsistent. There's one inconsistent result, and that is we expect a nature of operations disclosure to be provided, and Microsoft did not provide that disclosure per our testing. Okay. So basically, the application verifies that the report is created correctly. So, but let me show you this piece here, this agenda. Let's go back to the report. And let's delete the inventories disclosure. There's the inventories disclosure. Let's delete it. It automatically shows up in the agenda. Let's delete another one. There's the goodwill disclosure. Let's delete it. So why are these disclosures now popping up in the agenda? The reason is because the software application understands financial reports. There are rules that have been created. I'll show you those rules. So here we have a rule that says the balance sheets are required disclosure. So if it's required and we delete it, then it's no longer there, and therefore that's an inconsistency with our expectation. The same thing with, where is it? There's the goodwill. If the line item goodwill is reported, then the goodwill roll forward is a required disclosure. We deleted it, so it now shows up in the agenda as something that has to be done. If the inventory the line item inventory net is provided, which it was, but we deleted it, then that's an inconsistency. So that's why those items show up in the agenda. So what's happening is we have a machine readable reporting checklist. That says, it's represented in XBRL definition relations, it says that the balance sheet is a required disclosure. It says that if the line item inventory net is reported, financial report reports the concept inventory net, then the inventory net roll-up is required disclosure. The same thing for goodwill. That's the wrong good. Oh, there it is right there. And this is an alternative. So this is required, or this is required. It provided this. So in addition to the reporting checklist, we see whether it is there when it should be there. We check the disclosure mechanics. So now see, we looked at this before and it didn't have any errors, but now it has errors. It says it's inconsistent with expectation. So let's look at what's going on. Here's some rules that state what that disclosure needs to look like. All of these rules are human readable, but they're represented in XBRL again. So here's the inventory disclosure. Here are all the rules. Again, represented in XBRL. Here's the ARC role that provides the information, the relationships for the entire inventory roll-up disclosure. So that's all I want to show you. I will do more at another time.